right, a very good morning to everyone. I hope you guys are doing amazing, and I hope you guys had a beautiful weekend. Yeah, you know that for guys who are in Nairobi, things were a bit tricky, but don't worry, you're not in it alone. Kampala wasn't any different when it came to the floods. I think that was on Friday. Yeah, so people were affected by that. So I hope the guys in Nairobi definitely get to recover, as well as the guys in Kampala downtown that were affected by the Friday rains. Should have been almost like an East African thing. But luckily enough, our friends in Dar es Salaam definitely survived. But other than that, I would like to thank you guys for tuning in. I hope you had an amazing week. And I hope you guys are ready for this week. There's a lot going on in the markets as of today morning. There is a lot that we're going to unpack this week. So, of course, don't forget in times like this, some things you have to pay attention to is what's going on the geopolitical scale, on the global scale. And definitely you want to manage your risks because imagine you are shorting US oil on Friday and you wake up with that gap, you know, a jump from 70 something dollars to $100 is very, very crazy. So other than that, don't forget to take advantage of the FXPesa Caribou bonus using the link in the description as well. Then you can create your account and get a 100% deposit bonus on your very first deposit. If you're in Uganda, Tanzania, don't forget we do have physical classes in Tanzania, Dar es Salaam, FNB House Level 3. And in Uganda, that's Kampala. We're in Rumi Building, Lumumba Avenue on the 7th floor, and the classes go all through the week. Dar es Salaam 1 p.m. and then of course Dar es Salaam 1 p.m. and Kampala 3 p.m. for the physical classes. On top of that, if you aren't able to make it to those locations, or you're in Kenya, for example, you could take advantage of our Zoom classes. We do have an 8 p.m. session. That's for the beginners. So if you know a friend, you know 2 people, you know 3 people, you know 5, 10, 20 people who are interested in getting started with the financial markets, and you can as well share with them the link in bio that's in the description, and then they can sign up for that 8 p.m. beginner class. And I believe it's actually user-friendly. Probably you have a 9 to 5, or they have a 9 to 5 and they're back home in the evening, and they can spare about an hour to get started with their trading career. Kindly feel free to share with them the link in bio so they can enroll in the 8 p.m. class. In case you're an intermediate, intermediates looking for strategies or specialize in specific strategies, you can as well put them in that 10 a.m. class. That's for intermediates, where we talk about things like strategies and different aspects of trading with from different educators, so you can broaden your knowledge with the market understanding as well. And don't forget for market analysis and market insights, Monday to Friday, we are here on YouTube at FXPesa to break down what is most likely going to move the market and what we should pay attention to based on the market movers every single day at 11 a.m. as well. Other than that, we can now get started by looking at what we expect to happen in the markets today. So anyway, this is the stock screener, and you can see what's happening on Wall Street. Wall Street is practically red. We have seen major advancements in the Iran, Israel, and US war. And of course, we are starting to see many companies get affected by this. And one of those things you're going to look at, of course, is companies like Microsoft, Apple, Nvidia. These are tech companies, of course, but now when the war starts escalating and going into more countries in the Gulf, a lot of interests of different companies are being hit. So you can see a lot of this is starting to get affected. So this basically shows you that pairs like S&P 500 and NAS 100 and US 30 are most likely for US 30 to be possibly in a consolidation. I'm not seeing any major companies here, probably apart from Walmart. Let me see what other companies here. I'm probably just seeing Walmart having a positive market open as we get into the London session. But besides that, we look at the biggest markets or the biggest companies in the US, and it's looking pretty bad. And we have to reflect this into the indices that we trade as retailers. This basically makes them look bad or look bearish. Worst case scenario, they'll be in a consolidation. We shall look at some of those when you get down into the technical bit of it. But this is a general picture of what you can see happening. Coming on our new sector over here. Good morning, Samuel Njathi. Samuel Njathi says we'll look at Euro USD. All right, in a bit, we are going to definitely look at Euro USD. When you come up over here on our new section, we can look at some kind of major and these events. Let's see what can basically affect us. We have dollar rises on heaven bid, oil as Iran, war rips across markets. having been oil as okay. So basically, the meaning here is that, of course, the dollar is still a safe haven currency because the US hasn't directly been in harm's way in regards to the war. They don't have any major interests that could probably scare American investors to not invest in the dollar, right? But the other currencies that the investors want to look to invest in, I mean, look at the proximity between Iran and the UK and European nation countries. So such investors will want to look for one, either a safe haven, which would have been gold by default. But right now, realize that our investors, when they're still having a risk on sentiment, they don't just run to gold. They'll go to other currencies that look like they can still offer better yield value for them. So they'll run to the dollar right now because not directly in threat. Something we have spoken about, I think, for a whole week, even the week before, why these investors wouldn't run directly to gold. And we have seen gold, just like we did see this happen, I think, around May last year, when Iran and Israel were going through a war. Gold didn't just buy, it was a dollar that got strength actually because it wasn't in direct harm's way. And the investors still went to the currency because of the yield our value intends to offer them. So at all costs, we still expect slightly a stronger dollar until we really see a major threat to the US uprising from this war. But right now, they don't really have that kind of major threat on them. The threat is all around the Middle East, the Gulf countries, and definitely the European countries. So the dollar is pretty strong as well as you can see. Stock markets all surged past $100. That's something we have spoken about. I was here on a Monday, just like this one week before the war started. In fact, that week they just scheduled a third meeting with the Iran negotiations and we spoke about oil rising. Of course, then my target was $85 per barrel and we were about 67 then. That was the week before the war started because the war began over the weekend. But that Monday, we came out here, we spoke about this. I gave out my trade ID on US oil and my target was $85 per barrel. Right now, we are way above $100 per barrel. So for the guys that took advantage of that, shout out to you guys. I didn't take the whole move, but I took part of it going into last week and the week before. So okay, now let's move into trading economics and see, or trading economics and see what we could basically look out for as well. So here, of course, the main thing on everyone's mind is oil set for a strong week. Oil prices are now on track for their biggest weekly gain since early 2022, up 20% amid intensifying Middle East tensions that disrupted shipping through the Strait of Hormuz. We've spoken about the Strait of Hormuz, how significant it is, and I've told you guys for as long as this strait remains closed, not just oil won't just buy up. We're going to look at weakening European currencies, speak about the euro, we speak about the pound, we speak about the Swiss franc gets tricky because it's not in direct terms, but the fact that oil is not moving through good supply throughout Europe, it gets to be affected a little bit. But again, we stand to that if the Gulf is being attacked, some major investors or billionaires will want to run and take their money into safety, right? Which is banking facilities. And if you're going to keep your money, you want the best tax policies in terms of banking safety, which would be Switzerland. So it becomes tricky. So you realize that Swiss franc weakened initially, but it started gaining up a little bit the more countries in the Middle East got attacked, or in the Gulf, countries like Dubai got attacked, Bahrain, threats on Saudis and Qatar. We started seeing that some of these millionaires or people with the money are moving it to Switzerland for safety, right? And that gave the Swiss franc a bit of leverage and still is giving it a bit of leverage. So the Swiss franc, unlike the euro and the pound, is not really that weak as we expect, right? So gold are set for weekly loss. Gold rose around 5,110 per ounce on Friday, but remained on track for its first weekly decline in 5 weeks as a strong US dollar and higher treasury yield offset the geopolitical risk premium. Now, this is the right language, I think. This is the right language. Treasury yields offset the geopolitical risk minimum. So remember when we speak about currencies, this currency is not what they call a yield, right? If I buy a stock currency, it's going to give me a yield. That gold won't offer me. You get the idea. Gold will offer me a yield. Gold, I'll just based more on its price increasing, but I won't necessarily get the yield. So in this case scenarios, in some of these wars that don't directly affect the US, then gold won't become the safe haven asset, but the dollar becomes a safe haven asset or any other currency with a good yield. That's like a return on investment, right? If I buy it with a very good yield, that means I'll get more money later on. But remember, gold can also dip. We saw 2021, 2022, gold going to as low as 1700, right? $1,700 per ounce of gold. Now imagine someone had invested in gold as a safe haven when it was at 2060. That was the peak by then, right? Going into 2023. The peak was 2060 per ounce. But then we saw a whole 2022 where it dips to $1,700 per ounce, right? That means as an investor, you would have lost a lot of value in your money. But with a yield on a currency bond, it's like if I buy it today and my yield is like a 4x, I'll get exactly that in 5 years. Even when the currency kind of weakens, I tend to have a safety net, right? So those are some of the things we want to look out for in simple terms. So moving on to our Forex Factory, we want to look at some major news events. Do we have any? So you can see Monday, March 9th. We don't quite have any major news events to look out for, which is not a very good thing, but it's not a bad thing because then you tend to rely entirely on what the markets are basically going to be giving you. Your price action will tend to be more effective on top of the geopolitical factors we are seeing happening around, right? On top of those geopolitical factors. So having looked at a bit of the fundamental perspective, or the macro perspective, let's get down on our charts in a bit and then start looking at what exactly to expect in the markets today and probably even through the week, just see a whole outline of what's happening on different pairs. All right. Good morning, look guys. Alexavia says USD JPY, GBP USD, or USD. All right. Thank you. Good morning, Irene Miner. Hope you're doing well. I hope you had an amazing weekend as well. So, right, this is a Bitcoin chart. Shall come to Bitcoin later on. So let's start with Euro USD. Okay, let's see. Let's start with Euro USD. Move on to GBP USD. We shall have a small hint on AUD USD. Usually, when you have Euro USD and GBP USD, the other USD pairs in that perspective of XXX USD become a bit more aligned. Yeah, so let's venture move to USD JPY, and of course some gold, some oil, some NAS 100. Yes, okay, this is Euro USD. So the analysis from the last time I was here, we had anticipated either price would buy up to this level here, then give us some bearish confirmations, or it could come into these zones here, as we had marked them out, so good zones to sell from, and then give us bearish moves, right? And you see right from this zone right above here, price comes into it and sells to the downside. Of course, the market opened with a gap down, which would have worked out in favor of our analysis from the last session we did have. That was on Friday, right? So we had some nice trades coming in from that. Of course, they did that play today. And right now, what we're looking at is still a strong dollar, which means you expect the euro to be relatively weaker. Okay, so let's just get rid of some of this. So these are 1 hour time frame. I would like us to go to the 4 hour time frame. Obviously, the charts in that clear. So let me zoom it in. Okay, so let's zoom it in to that extent. I think that's the most zoom I can do on the chart. So when you look at this, we said price had been in a bit of a consolidation. If you look at this clearly, we had this whole movement, then price started gaining up, a bit more of sellers, right? So we said price has eventually taken out this low that we had on the left-hand side. And in regards to when it was coming down to take out that low, we did see an imbalance in between this. Some people call it a gap down. It's pretty much the same thing. So I can tend to mark out this gap down as an area of interest. For example, then you see price is tapping into it, trying to reject it as well, right? So when I go down to the 30-minute time frame, what do we see price giving us right below this? So personally, I don't like trading in these gap downs or gap ups when they appear, but I always look at the zone above the gap ups or the gap downs. In this case, it's a gap down. So I would really like to look at this zone here as my area of interest. So it looks like a big zone, but this is Euro USD. So when price comes into this whole zone, it's easier to pick a confirmation, basically because you have a consolidation, a bit of like a manipulation of a sort. Then price eventually sells to the downside. So I don't really like trading inside these zones here, the gap downs or the gap ups. However much they tend to act as areas of interest as well. So what I would tend to look out for is going to be where price currently is. We see price pushes all the way back into the correction move after the morning sell of the market open. So after giving us that push down, it comes back into a recovery, looking to try and come and fill up the gap down. It taps into the gap down, then now bears start coming back into the market. So when I look carefully, I'm going to realize that there is a zone right below this that can act easily as a support level, which is going to be my area, my support level in simple terms. I'll need price to come and break below that support level there. That means if price breaks below support level, I'll be looking for bearish opportunities, at least to push me to this area here, where you can see this demand. And off that level there, I would expect some bit of a pushback and then a continuation to the downside. This is entirely basically because I'm looking more at a strong dollar, right? I'm looking more at a strong dollar compared to the euro. As I said earlier on, or even last week on Friday, when European nations are not getting enough oil and gas, that means a lot of sectors are unable to function to maximum capacity. And if they are unable to function that kind of capacity where they need to beat their demand, the economy weakens, so does the currency as well, right? So I'm looking still more at a bearish euro. So as far as the war continues and the Strait of Hormuz remains closed, we shall still be looking down into selling the euro pairs, right? Selling the euro against the dollar because the dollar is strong and the euro is weak. So that's what I'm looking out for in this case scenario. Push below this, sell to the demand, probably get a pushback and continue the move to the downside until things change on the geopolitical scene, on the global perspective, right? In regards to both the dollar and the euro. So that's your USD. What I'm looking out for is that when I look at GPUSD, let's get to the 4-hour. So we anticipated sells. The price used a level slightly above the one we had marked out. It came all the way into this QM levels. But then eventually it does push to the downside, right? The momentum on it was a lot. So I intended to say a lot of kind of like correction moves or rejection moves around these highs. So when it comes down to the 4-hour time frame, we're going to have a very similar perspective to Euro USD. We're seeing, of course, the price is bearish. When you come in, you can easily notice R as demand, as how do I call that, a support level. We can clear that support level. Then we can notice that the sales that we are in came from a supply zone. This was the supply zone that we had right over here, right? We have a supply zone right around here. All right, Simon Gitonga, good morning to you. Good morning, Odiwa Opar. Hi, everyone. Dr. Rufus, what happened to my hair? Aye, man, we are still in war. We are still in war. We had to first reduce the hair and first focus on the Iran-Israel tensions. So you can see that there is clearly kind of a range. And if you notice the price action that has been going on in here, this range has been holding price quite a bit, right? But in the wake of events that the dollar is our safe haven at the moment, right? The dollar is a safe haven as we speak. As I said, that until we get any major foreign interest of the US being targeted directly by the Iran missiles, our investors will still look more at investing in the dollar because of the yield, right? As I think the dollar treasury gives a bigger yield, as we saw in the article earlier on. So we are seeing this resistance level trying to push price back, probably to fill up this gap down over here. But as I mentioned, I always find it more effective to either look for price coming in the zone right above the gap down. So we get rid of this and move our zone slightly above the gap up. The gap down, sorry, it's a gap down in this case scenario. So we have this area, we can push up to this, as you can see. So I like the zones right above this inefficiency here, but just in case the inefficiency is to hold, I'll tend to want to set inefficiency, come and break a key level. In simple terms, when I look at this once again, you can just easily notice this support level here. You see that the rejections on it, the reactions on it. This would be a nice level for price to come and break below. So I'm going to just expand it to this. And even given the fact that we want price, or we are seeing that the dollar is strong, gives us more reason to want to look for sales on this particular pair, or to look more for bearish opportunities. A rectangle, let's see this. Try and get rid of this tool. So alright, so we've established that this level here, as much as I'm marking it from here, it actually is a strong support level, right? So I would love to see more of looking for bearish opportunities. Once price violates that area there, probably expect a correction, and then you look for the confirmation, push to the downside. Remember, we said the confirmation that I personally tend to fancy is what we call the shift pattern. I think IC guys call it the smart money reversal pattern, right? But once again, I tend to advise that you tend to have at least 2 to 3 confirmation patterns. Now, this is not a concept or strategy. It's just the confirmation. It's the last part that how they call it, and the reference is disappearing. But imagine it's like the icing sugar on a cake, right? I think it's icing sugar, right? The icing sugar on a cake that you're topping up. It's that extra thing you're putting in. Like when you go for coffee and then they put some things on your latte. Sometimes they even put a leaf unnecessarily, but just imagine that that's the last part. It's always the confirmation. It's always a confirmation. So once you have this, expect a correction move, and you can look at that push to the downside on GPUSD. Not very different from Euro USD. These pairs tend to move in similar manners. You just need to be more careful with which one is offering you the confirmation first, or which one is offering you a much clearer structure. That's the one you always want to deviate towards. So let's move in and a bit to I think there was someone that suggested odd USD, the Australian dollar, popularly another safe haven currency. In the meantime, when you have some more pairs, you would if someone says it's called garnishing, hey man, I've honestly had the word garnishing for my first time today. I'm not a bougie person. My apologies, I'm not a very bougie person. So these are new things to me. I know icing sugar. Garnishing is done for the latte. It could be done for the latte. If you have any baristas in the house, yeah, I think it's called garnishing. I'm not quite sure, but I'm definitely going to research after this. I definitely have to do the research. Now let's look at odd USD. Now I don't know about you guys. Once again, this is another pair that they is showing that has very beautiful price action. Like this is it's beginner friendly. It's how would I call it? Basic friendly. Lower lows, lower highs. It's right now price channel or to trend lines. It's not really moving further beyond that. But let's look at what's going on right now. We did have this low. This was a sweep, of course, of liquidity, taking out all the liquidity on the left hand side this way, as you can see. But then price creates a series of more lows right after that. Then this was our most recent breakout to the downside, as you could see. And in terms of reaction, we realize that odd USD has already filled. It has already filled the gap down. Now, it's always a good sign in simple terms, which means that this is a pair that is a little bit, how could we say it? Lately, my English is trying to diminish slowly, looking. But how I would say it is that, hey, it's nearing confirmation, or it looks like it's ready. It's almost ripe. The pair is almost ripe. Basically, because for it has already filled up the gap down, and we are seeing the rejection happening already. Usually, when you see these kinds of major differences when correlating pairs, it just shows that one pair may fulfill the objective, then the other one will just, how would I call it? In Uganda, we have a different term we use. I'm going to try to interpret in English. They said ebukira ekigenda, like you hope on what's already running, right? Like someone starts the motion and you hope on it. So that's what happens with correlating pairs. So you may find some days when Euro USD has already reversed, but other pairs haven't yet reversed, right? They look like they're still in a correction. Then from nowhere, you see those pairs turning all of a sudden, right? And changing direction. So something of that sort. So when I look at odd USD, it appears like for it's already begun its motion. It's filled up the gap down, coming into the zone above. Let's just establish the zone above. You're going to realize the zone above is similar in all these three pairs. It's always the zone I like trading from. The one above the gap up or the gap down. This zone is the one I really love trading from. Once I have a gap anywhere in the markets. We have seen gold actually do this 3 times this year. Though we have been buying only, not selling it. We have been buying, but it will move up a little bit for a while. Then it comes, fills up the gap. But once it fills up the gap, it doesn't turn back. It just shoots like it was never there in the first case scenario. So when you look at this, the momentum this side is really, really good. You can see old USD picking up a lot of momentum. Here is now its support level here. And as you can see, these structures are just similar. They are very, very similar. You can now establish this. Let's look at the reactions at so first rejection, second rejection. We have the zone and then the third level there. Then we need price to break below this. And then we can look for that push to the downside, definitely targeting the next trend line level or price channel level, as you can see it here. So that's the perspective we want to look out for in regards to AUD USD. Not very different. Structures are slightly different, but pretty much the same perspective, the same outlook. And this is something you may want to definitely take advantage of here and there. So that's old USD as requested for by Lugaizi Alexavier. So you also asked for USD So let's check USD Meanwhile, a special shout out to everyone out there who's fasting. Wish you all the best. Pray that you achieve what you are fasting for, what you're desiring for through the fast, or what you're praying for through the fast. Because now we're having both late period and the Ramadan period going on. So our prayers are with all of you guys on fasting. And kindly, if you're in the market, don't forget to do maximum risk management. Very, very important as well. So I think last week we spoke about how it's another pair with beautiful price action that has been happening in a few weeks. So you could see that when you look at a couple of days back, it just had a very nice clear uptrend. Low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. It's just been having a very clean uptrend. And from Friday, we spoke about continuing this uptrend, right? And what do you see? Price came in, pushed to the upside, giving us that beautiful turn of price action as we had expected from last week. We had spoken about the resistance here, then we spoke about our correction move, then I pushed to the upside and played out beautifully. So for the guys that took advantage of this, congratulations to you guys, kudos to you guys, oh, big ups to you guys. I don't know the right language. I'm trying to pick up the right language to use, but let's go from there. So we have first our resistance level that price had formed from last week, and we see price break straight out of it, giving us a gap up in this case scenario. So if we come down to the most recent breakout, this was it. And that definitely is our demand level. Now we still expect price at USD The dollar is a safe haven as we speak. The demand for it is increasingly adding momentum to dollar-related pairs, right? Or giving them a more decisive direction in general. So when you look at this, a price currently rejecting what many people would love to call a fair value gap or an imbalance. But as I told you, I don't like trading. Okay, it was the gap ups I don't like trading. But for the imbalances, I think I was talking about this 10 AM plus. I love trading them when there's what they call a lower time frame demand level. Let's mark this one out and see. I love trading them when there's a lower time frame demand level. So let's take this as our imbalance. Next, beautiful fair value gap, as some would love to call it. Then we get down to our 30-minute time frame. Okay, so here is the area with the imbalance. So I always love refining these imbalances until I find a demand zone. Some people got a bullish order block. For me, it's pretty much the same thing. So this whole grid area was our 4-hour time frame imbalance or fair value gap. When we come to 30-minute time frame, we can notably just see a demand level inside there. So reduce this over there, reduce that over there, and you can realize that this is the level that's actually currently holding price. And once again, the market keeps repeating the same patterns. It does these things time and time again. You can now move from this and look at the support level. So this is support level that price had given us. We said price comes into it, buys up, comes back, rejects this level here. And the previous 30-minute candle was very bullish that it actually swept the red one and then came and engulfed it aggressively, which gives us room for more buy opportunities. But at the same time, I'm going to realize right above that, we are having a resistance level being formed right around that. So what we'd love to see is, of course, for price to come and take out that resistance and push to the upside. Yeah, so that's what we're looking out for on USDJPY buys. You can see they're coming in nicely. The momentum on this is quite nice. Or on dollar pairs today morning, the dollar is just getting strong, as you can see on these other pairs here that are content to reflect exactly that. So we shall be looking for buy opportunities once price is able to close above that resistance, probably take out the previous high on the left hand side, as you can see over there, about 158.901. That's the level around which our zone has been created. That's as far as USDJPY is concerned. The anchored trades. Good morning to you. How are you doing? So, guys, this is for the pairs you've requested for. What other pairs do you guys have in mind? What other pairs are you guys are watching out for? What have you put on your watch list today? As we move on to gold, BTC. Oh yeah, we're going to the US oil time and the event for that day. So I want to just go through gold, Bitcoin. Then we end with US oil. Will we tell our story? Good morning to you. Kindly give me help, like Kenyan helpline. What you do, you can go to our website, FXPesa Kenya. You will see a phone number that you can reach out to, or if not, you can send an email to support@fxpesa.com. Sorry, just a minute. Let me first turn on the SC. Someone is getting so hot in here. All right. Okay, let's now gold, right? This is analysis from gold coming in from this was analysis from gold coming in from Friday. Price was forming this kind of pathway, and we have spoken about looking for buys only if gold breaks above this resistance level here. You can see a strong resistance level, and we did mention that it formed a similar pattern right before NFP and right before the CPI. So we spoke about looking for some bears and if price had broken below this. And usually I prefer when price breaks below my trend line, comes back to a good SNR level. 5-minute confirmations for me on gold. But let's look at what's happening in today's price action. These zones, all these areas have already been utilized. So let's look at this. This is our breakout zone. Then that's our high, right? So except gold has come into this supply level, just tapped on it and it's now selling to the downside. and that's on a 4-hour time frame. So let's look at the 30-minute time frame and see what exactly is transpiring. So it separates, comes up, pushes up very beautiful and very nice, taps into the zone and starts crashing to the downside. So we get a fair amount of correction. I just want to establish if it's within my range. So as you can see, of course, it retraces to at least more than 50% of the breakout leg, which means it's a valid area. And it sells right between what I love calling the golden zones. I think ICT guys love calling those the OTE levels or the optimum trade entry levels. But I think you notice about that area is that we had a clean zone right around this. You see that? We had a clean SNR level right before that. So price comes back into it, the power correction taps into it and begins pushing to the downside. Now for me to look for trade opportunities within this, first things first is support level here or the supply level, which is this. I'll need price to break below this, push lower, or give me a confirmation to actually sell the markets from there. Now that's my support level I'm going to be watching out for. And then the resistance from which price initiated its move from to the downside. So love to see probably a break below this. Then a correction, the retest. A correction is different from a retest. A correction is price moving with a series of higher highs and higher lows, lower lows and lower highs, in the direction of the opposite to the impulsive move. That's what we call a correction move, or what we call a retracement, right? So that is just an SNR level, and there's SNR zones, support and resistance zones that we are looking out for. So that's called on a 30-minute time frame, and exactly what we shall be looking out for. So someone does ask for USD CHF. Let's look at USD CHF. So USD CHF, as I told you earlier on, it's trying to get a bit of some strength because some investors tend to look at it as a safe haven, basically because of their banking tax policies. So people would like to move their money towards Switzerland franc or to Switzerland, right? But the dollar still is becoming eminently strong. So what would we love to see in order for us to look for buy opportunities on the dollar? Here, similarly, we are kind of almost filled out our whole imbalance, right? Or gap down. And having done that, there is going to be a resistance level above that. We saw support levels on EU and GU and odd USD. Here we are seeing a resistance level because they're inversely correlated. So you can see that as a resistance or the resistance whereby we would like price to break above. Then we can look for buying opportunities on a USD CHF upon a retracement and confirmation. Very, very important. Retracement and confirmation. They need to go hand in hand. So that's USD CHF and the outlook we are having on it. We can move on to US oil. So US oil, the last time we did analysis on it, we spoke about the breakout, the correction, the continuation to the upside. So US oil, when we look at the 4-hour time frame, we do have this gap up. The second gap up just formed. The other one was the first one from the other week. Then now we sweep it to have a second gap up, and price looks like it's been able to come slightly tap into it. So I'm not really going to do much on this.